Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, February 8th, 2023. It is 2:47 p.m. Eastern Time as I'm starting the video, so we've got about an hour to go in the trading day. And I want to cover a couple sectors and some trade ideas for you. I told you that my expectations are that we may grind around for a little while here, and so I'm going to and have been looking to sniff out the most bullish and bearish individual stocks as well as sectors, commodities. In other words, great time, in my opinion, to run a diversified portfolio. Now, with that being said, I'm also actually increased some my net short exposure to the equity markets today via a couple sectors here, and I'm going to go over those in this video, and we're going to cover well, I plan on covering the semiconductor sectors and the private equity sector. And I have ETFs for those. That's simple, one size fits all. If you like what you see, obviously if you don't, then, just pass. But I do believe that there's a good chance that we're going to not only hit, maintain these uptrend lines as pullback targets since last Friday's highs. And we're very close. We've been dancing on that support, like I covered earlier, about 303 right there. However, I suspect we're going to have a bigger leg down here soon. So again, this is just me personally. I added some short exposure today via what I'm about to cover. Before I get into that, again, not much to update there on QQQ. Really, from this morning, I did an update then. Told you we were at minor support. I'm going to give you that just to update there. Where was I? That was on I'll give you a very short-term chart, 15-minute chart, which I'm looking for here. I'm going to pull that up and then move on and cover these trade ideas. And a quick update on natural gas. I don't know if anyone's taking it anymore, if everyone's thrown in the towel, but I definitely want to do an update there. And so we're kind of a little bit all over the place in this video. This is it. All right, and that's it. I think that's it for the bounce. Remember on this trend line here in the bottom of that support zone, we got a little bounce today, and that was probably it. And we'll probably come on down now, hit this trend line. Most likely get a reaction on the initial tag, and if we do, then you can see any pushback to that resistance zone right here, which we bounced off of today, would be an objective short entry. Maximum would be the uptrend line there. That would also be an objective short entry. And like I said, in the coming days to weeks, I think we'll probably take out this downtrend line. I'm sorry, uptrend line. That's the same one on the daily charts of QQQ. SPY has a comparable trend line. So does ES, of course. And so does IWM. I can go over all those. We can go RTY, small cap futures. Same thing. You can see here. This is a hourly chart. Told you I'd kind of jump around. There's the well, the first initial uptrend line. Lots of clean reactions. We're hitting it. But I think it's going to get taken out, and then we'll head on down to this next one here. So again, whether we bounce first or not. But let me get into the charts here. Kind of going to go off on a little bit of a tangent just to update that natural gas most recent trade. And just to reiterate, natural gas is probably it's the most volatile commodity out there that I know of. It blows away anything, including lumber, which is pretty volatile. And back here weeks ago, first highlighted when we came to this support zone. We blasted right through there. It was like a Monopoly game when you get the go to jail card. Pass go to not collect 200, just go straight to jail. That's what happened there. But then I said, that the next support I had, and that was way back then, is this level. And it's a good support level. It's change my color tool here, color to blue. This goes back to 2009. That was a low. We briefly took it out there, put it in an inverse head and shoulders, bottoming pattern, left shoulder, head, right shoulder, blasted off, support, took it out there, divergent low, and then it was support. Most recently, support for years. This was COVID, right? Yeah, that was all COVID right there. That's when it started. So the world stopped spinning for a little while there, and crude went negative, and natural gas, everything went down. But as soon as the Fed threw out the nuclear option and the inflation trade started, it once again taken out, acted as support. So a lot of reactions there. I still believe we're in an inflationary environment that's not over with, unlike many that are cheering, thinking the Fed did their job and inflation was, was all behind us. And it's so here you go. You are at the, remember this is an end of day chart, yesterday's close. We're still within very close proximity to that level. In fact, we're holding the yesterday's lows right now on intraday charts. This is again an end of day weekly chart that just shows yesterday's close. But there it is, overbought on the RSI. The last time we were close, almost there, almost, and not even all the way there. And that's what happened right there. That's what happened right there. Big rally, oversold right there. If I said overbought, I meant to say oversold. Oversold. So you can see that's usually on the weekly chart what caps this. Sometimes you get divergence and a little bit lower low. So there are no guarantees, like anything. Small amounts. And then, of course, UNG, it's still above the trend line. It's back testing, and let's see if we get a successful back test or not. Daily chart, yesterday's breakout candle, and that's TA 101. You either buy a breakout above a downtrend line, like yesterday, or you buy the pullback that back tests it. But you don't buy if you fail the breakout, meaning a solid red close back below here. So you could back test. We are back testing today. And we could back test tomorrow, another day. But again, we're in a support zone or at support on the weekly chart, and that's it. So PPO crossover so close, just not there yet. Remember, that would be our confirmation. You turn on the PPO histogram. Oh wait, look at that. We have, not to split hairs, I have a zoom in type 0.03. So technically a crossover. So if we can rally it to the end of the day here on UNG, you'll get that bullish crossover. And especially after this big red hill right here. These are red hills, I call them, when you're below there. There was your crossover right there, and you had a nice rally well into the double digits, as they often are. There was a bullish crossover after a big red hill down below, and so forth and so on. So we'll see if we get that. All right, let's not spend any more time on that. Let's dive into what I wanted to cover. Let me start with the semis. And let me just give you both, and then I'll drill down if there's time into individual components. Semiconductor, there's three main ETFs, at least that I track. This is SOX. It's kind of my busy chart, but I'll just take the drawing tool and show you what I'm looking at. This right here, about 425. Big, to me, massive resistance, because it was, back when we were in the bull market, it was support. We were kind of flirting with it there, took it out, it acted as support, rallied on to all-time highs in the semis, and then that put in a divergent high, and we started moving lower. That was the official end of the bull market, beginning of the bear market, and then once again, support. One last little rally off support, and then boom, broke down, lost it here. And support, once broken, becomes resistance, right? Simple stuff, isn't it? All right, that's it. So you can overthink it all day long, but if you want to take the simple approach, you can say this is a overbought rally, number one. And say overbought is an understatement. We're almost to extreme overbought levels. This is the highest overbought reading that we just hit on the RSI since the last bull market right here. So we are definitely overbought, and we have what I like to see, negative divergence. Right there, flat equal highs on the PPO and the RSI with higher highs in price. That's negative divergence, as long as you have one making, in this case, prices making higher high and equal or lower highs on the indicators. PPO is rolling over, poised to make a bearish cross, but hasn't done so yet. Momentum is to the upside. If they can power on up through here, sure, that's going to be bullish. You could take out the divergences as well, but and if you are the cautious type and you want a little bit more solid sell signal, what I did is I took a starter position today, and which I will add to if and only if we take out this trend line right here. There's the uptrend line. So here's a common theme. I've been highlighting some comparable uptrend lines on the indexes, the steep near-term uptrend line, and then these longer-term uptrend lines off the lows. So, it's very possible to just see, a near-term bearish case with a nice correction back to minimum target for minimum I would actually have to add to be stand corrected here. Okay, right there, first and minimum target 410.21, 391, and then max target at this point in time, that could change, would be the uptrend line and that 377.40ish support. That would give a pullback of about 12-13% in the semis if hit. And again, we are in, by many accounts, a bear market. This one's starting to stretch the limits because you have these reaction highs here. It's really where the semis should turn down, ideally, because if they keep going up again, you start to take out previous highs. So I'm just throwing it out there again. I think at best case scenario, if you're patient, you give it a little room. We'll probably consolidate, maybe pull back a little, but I wouldn't throw it out there if I didn't think there was a decent chance of a double-digit pullback in the semis. So that's one. If you don't short or can't short for whatever reason, SOXS is your ticket. It tracks the same index, the Philly SOX Semiconductor Index, and this is just the inverse, the short version. 3-time leverage, so be careful. Beta adjust your position size if you take it. And when these work great for you is in a unidirectional trend, when the semis are, in this case, falling pretty, without many kickbacks, you will actually outperform in those kind of drops more than 3 times the drop in SOX. But where you don't want to own it is in slow grind trading ranges, and that is a possibility. So right now I'm just favoring just a pure play short on SOX. The other two, and some of these have a little more volume, XSD, that is the Spiders S&P, just a different basket of semis. Same thing really, other than the resistance level. This one has a different weighting and different components in there. But there's the primary uptrend line, minimum target right here, 192.15, a high probability target. That was a breakout right here, and I have to acknowledge that. We had a major action high there, breakout, and so if you're a bull, I think this is my most bullish case for the semis, and then this would be my more bearish case that the whole thing peters out here. So right now I'm not looking that far ahead. I'm looking this far ahead, and that would be minimum about an 8% drop on XSD, X-ray Sam David, and then you have also SMH is the other one. This one looks just like SOXX. The chart's very similar, massive resistance right here, right about 250 or so, right about where we're trading now, with a nice clean uptrend line in which to trigger a second. For me, that's again the add-on, and that would also be a false breakout as well. Meaning, let me change up the color again. That breakout right there above this and all this back here and all that support would be a failed breakout, very bearish in my opinion. And same thing, I can give you an initial target right there if you're in active trading mode. But I think said and done, before all is said and done, work our way down to right here to that uptrend line. And then, if that happens and we start to head down, I'll look at everything else, bonds, stocks, the market leaders, big tech, and decide, whether I think, it's time to do that, or time to press those shorts and write it down for some more. Alrighty, we can go through, but it would take too long, all the individual components. Just look at the big names, the top components. NVIDIA is the 800-pound gorilla in the sector. It used to be Intel, but Intel is now way down the line. There's NVIDIA, clean uptrend line in which to trigger short, simple stuff. Again, break of the trend line, major resistance. That means this would be a false breakout. If it falls back below 209, it would take out the trend line. You'd get the bearish PPO crossover. Last bearish PPO crossover high level was right there, and that was a great time to short. And there was your break of the trend line and price support, and that one was good for double-digit drop. So simple stuff. You're in a bear market, look for these bearish PPO crossovers. We didn't get it yet, haven't got one yet, but that'll help to confirm and maybe again give you, if you're going cautious, you want to just do a starter position now, a quarter, a third, a half. That's where you'd add your second half. Just like we're waiting for that confirming bullish crossover on UNG, natural gas. Again, I could go through them all, but it's going to show you the same thing. You're going to see over and over uptrend lines that some are closer than others, some have more clean uptrend lines, but in almost all cases you're going to get divergence. This is a sector where birds of a feather flock together, meaning most of the semis will rise and fall together, a lot like gold mining stocks. They tend to move more so in concert than, say, healthcare stocks, which have a more diversified, business model among all the components of a healthcare sector with pharmaceuticals, biotechs, some with drugs, blockbuster drugs in pipeline ready to for phase 3 approval, others that are coming blockbuster drugs coming off patent about to have their lunch eaten by generics. So that's why there's so much more diversity in the healthcare sector. Alrighty, we're not going to go through each and every one, but you can see common themes as I go to ASML. Just look at the top holding, big divergent high, boom, correction. That divergence has only gotten bigger since then. We had negative divergence there at that first drop. Bigger divergence tells me bigger drop and likely to take out this trend line and see easily a double-digit gain on the shorts on some of these. So I will, especially if I get interest, post your interest below this video in the comment section if you want individual names. There is a benefit even for a full-time trader to kind of keep it simple if you're diversifying among many assets, asset classes, if you have various commodities, long, short, gold, silver, GDX, other, crude oil, natural gas, you name it, and then of course other individual stocks and individual sectors, then that's where ETFs help, kind of one size fits all. And then also you don't have to navigate earnings. Now we're mostly through the thick earnings season, but individual stocks, you never know, it could be an earnings report or just bad news that comes out of nowhere that sends a stock against your position, and of course that's mitigated. Those risks are mitigated during when you use an ETF based on a number of holdings in the diversification. All right, next up, PSP, private equity. Okay, I've stated over started last year, saying I think this is one of the next big shoes to drop in the financial system. I think I have very little doubt that private equity, the big firms like Blackstone and the likes, have. Well, one thing they get to do, the benefit of a private equity firm, right? Why companies go private in the private equity firms themselves is did not have the reporting issues. Well, these are publicly traded, so hold on, I kind of probably threw you there. As far as what we're looking at here, this is an ETF, so you can buy and sell this, and there are 3 of the largest top 5 private equity firms happen to be publicly traded. Many of those firms are not publicly traded. Okay, so I don't know if this one may have. You'd have to look it up if they have some anything else in there. But I can tell you that some of the holdings in this one, and we're going to go through those. Not all of them are some of the big names here, but let me just give you the takeaway on this. My quick thoughts, and then later on I'll talk about the private equity, how they kind of get to mark their assets to market, and they're not traded. Their holdings are not subject to the powerful sell-offs and moves in the market. There's a lag time there, typically, for the holdings of private equity firms to be reported, reflected, I should say. And so I think, and we can see this. You can see how the private equity firms stopped. They did this ETF, like everything. Remember, on mid-October, that's when the market hit a bottom. S&P and the Nasdaq, everything's rallied since then. But what this one's done is rally right back to resistance. Now you can see these as I go through a couple of these names. You're going to see note, note, note. That's just me, my quick way. I just click on the note thing, and usually if I have time, I'll type in head right here. That's just a potential head. I'm showing you what would be a bullish setup. Left shoulder. This would be your head. I'm sorry, I called the neckline a head before up here. I've changed that. NL is neckline, or you just spell it out, neckline. So this is a inverse head and shoulders pattern, potentially. So I'm giving you something for the bulls, something for the bears. So this is, I'd be remiss not to point this out. And this could play out. However, here's the however, and this is where I tend to confuse people, but I try to do my best to differentiate between near-term outlook and near-term positioning, and then longer or intermediate term. This would be a longer-term bullish pattern. A inverse head and shoulders pattern, I encourage you to look that up if you're not familiar, is a bottoming pattern, a potential bottoming pattern. So this would be what it looks like. Now, you could also say that we didn't make it all the way up to the neckline right here, so I'm going to draw this and show you that, again, this is kind of glass half full longer term, but glass half empty near term. Let's just say that's the head. This is the first run up to the neckline right here, and now we're going to put in a right shoulder like this. So that would give you a near-term pullback and would come in somewhere, if it's somewhat symmetrical, it'd be a drop about that magnitude, give or take. Doesn't have to be exact. Now you can draw it differently as well, and you could still have the bullish pattern. You could draw a sloping neckline like this. I just want to point that out, that these are possibilities. Now, the reason that I'm not putting too much stock into the pattern now is because you really want to see on the formation of both the head on an inverse head and shoulders pattern after the head's put in on this rally back up to the neckline, as well as after the right shoulder's put in on that rally. These two moves are supposed to come on increasing, clear increase in volume, and I don't see that. So this potential bottoming pattern, inverse head and shoulders bottoming pattern, does not meet the volume criteria that you want to see, and therefore it's less likely to play out. Well, something worth watching, but what I can tell you with certainty is I see resistance here, and I see an uptrend line right here, and I see negative divergence right here, and I see a bearish crossover. Let's see if it occurred. Either way, it looks imminent. Yep, right now today, first time. All right, so let's just play a little game here and say, okay, there's a bearish crossover after with a breakdown below the uptrend line. So that is an actionable short. I took this starter position here. Last time we had a big green hill, and then a bearish crossover was right here, somewhere here-ish. And there was about a, close to a 10% drop there. The time before that was this green hill right here. And from that point, you got the bearish crossover. There was a drop of about 26%. I could keep going, but I think I made my point there. There's enough evidence, despite the current trend, uptrend, rally into resistance, negative divergence, big divergence too, by the way. This is kind of divergence that doesn't put me short for a day or two. This thing could drop 5% tomorrow, and that's, it's probably going to go more from there. It's not... that would be a minimum target. I really haven't even marked it up. I just kind of found this one today. Let's just say I'm going to give you these two and one more. Yep, definitely one more support level right in here. Those be your targets: 1030, 964, and 928. If things get ugly, maybe a back test of this trend line, maybe more. Let's just take it one day at a time. You also have the 200 days right there. And that would be bearish if we fail. If this starts to play out, we take out the 200-day moving averages. All right, I won't go through each and every component, but as I like to say, any sector is simply a sum of its parts. So what I definitely like to do is look at the holdings, especially the top, the largest holdings. This is Blackstone, symbol BX, one of the largest private equity firms, or I believe the largest out there. And this is a beautiful short to me. Yeah, momentum is strong. Not many out there that want to short this. I'm sure most want to buy it right now, but this is my kind of trade. It is extremely overbought right here. Last time we were this overbought was in the last bull market. Last time we were overbought at all in the bear market was right here. And you can see these purple, everything I have circled. So we're overbought. Overbought right there last time in the bear market. I'm just going to circle that. You can see what happened after that. We did that. Well, actually, we did all that if you really held. But initially, right away, we had that drop. Overbought there, right there, you would have got that. Now we're shorting that. Now we also have the purple lines here. That was the RSI down below. Purple lines are the PPO. I like to look for these high-level crossovers that occur above the zero line. Last one we had was right there. You would have got that. Last time before that was right there. You would have got that. And the time before that was right there. Now I can keep going, but I think you see the point. So wash, rinse, repeat, folks. OWL, Blue Owl Capital, same potential inverse head and shoulders pattern, although volume is not confirming. So I'm not too worried about that. But of course, I'm not going to sit here and ride that out short. I'm not short this individual one. I just took a starter in that ETF for now, and I might jump on a little Blackstone too. But there it is, trend line. You can short resistance right now. We're at resistance. both horizontal and that slightly upward sloping trend line there. But there's your uptrend line, and there's a PPO ready to cross over. Last time we made a bearish crossover was right here, and so forth and so on, right? Simple stuff. All right, so again, go through them all. KKR, same thing. Big resistance zone right here. We're at the very top of that resistance zone, so you can short resistance. That's objective anytime. Rally into resistance, especially an overbought rally into resistance, and especially an overbought rally into resistance with negative divergence. So I really couldn't be a much stronger case for me to get short these. I'd rather be wrong and stopped out and lose a little money than not take a shot when I see it like this. So that's me. That's what I'm doing, and I will be adding to those positions if I see all these trend lines break anytime soon. And if they don't, and we go up here and we start taking out divergences, and and we get much more overbought, that's more indicative of early stage bull market action than it is bear market. So that would be again, I only have a small starter, but I won't add. That's the thing about it. Sometimes I take a small starter. I'm sorry, I won't add on the way up. My plan on this one, sometimes I'll tell you I'm scaling in from the bottom of the top of zone, and I'll add to that short position even on strength. In this case, since we're at resistance on most of these already, I'm more concerned about scaling out if we keep going up than I am adding. The only way I'm adding to these positions is if we get those additional sell signals with breaks of the trend lines and the bearish PPO crossovers. And again, to clarify, these are swing shorts, shorts that I don't even plan to cover anytime soon, at least in the next week or so. Probably going to last weeks, maybe months, if they pan out at all, that is. All right, I'm going to wrap it up here, get it out to you, and yep, you'll get it before the close. It's 3:14 right now. This has been Randy Finney with Right Side of the Chart. Have a great day.